Good morning. This is Data Trader Pro with a pre-market wrap, actually a wrap from last night, but done in pre-market, June 1st, Wednesday. All right, let's get to it because I'll keep this brief. Basically, indices are in thrash mode. We are acting like we're topping, and what I mean by that is we're starting to get some divergences between the indexes. You'll see here on a comparative chart, the Dow, which was leading and made a higher high in relative terms, not in all-time high terms, to the other indices, is now lagging. And it's the weakest of them. Russell was really flying yesterday and made a new nominal high. But again, you know, our leaders, which are really S&P 500, sometimes the tech stocks, NASDAQ is was quite strong yesterday, can lead for a while and then suddenly there's no more money to put back into them and then everything falls together. So we're starting to see some cracks in the market, I guess I would put it, with some strong divergences between the major indices here. So it's something to watch out for unless something like Dow and the SPY start catching up and making new nominal highs. The market is probably in a turn mode. So, okay. Another thing that I wanted to point out is that something that we haven't had for quite a while is we've had bonds move up, we've had little moves in volatility up, but we haven't had those together. And until we get those together, I haven't been that confident about any kind of serious pullback coming. Today, or yesterday rather, was the first day in a while where we had that happen. We had bonds with a strong rally on all durations, from the 30-year to down to the 2-year. So bonds moving up, money's moving into safe havens. VIX is moving up. The VXST, the VIX, and the VXV were all up yesterday, and I'll show you more of that on the site. So yeah, so these are the kinds of things that happened on a trend change. So not necessarily calling a top right now. We have low volume, and that's why you get big snapback rallies like you had off yesterday's low, because basically there's shorts covering, there's very little volume to hold anything back, and we whip back up to the highs basically. And overnight we almost touched the pre-market high from yesterday. I think it was about 1.5 off on ES, on the futures. So but as of pre-market, we're back down near yesterday's lows. So you know, that kind of low volume stuff isn't very reliable for making huge trading decisions on. So as you can see. All right, let's go to the site. Let's start with trend. We had a day type call that was a neutral range day yesterday. This is reset because it's on the timer and now we're in pre-market. But these readings are from yesterday. And you can see what a neutral day played out as, positive, negative, and we ended with that strong rally back to close to highs, but no advantage from internals really yesterday. The DTP MCC, our version of the intraday McClellan, was bullish for much of the day, turned bearish with that downturn late in the day, and then pulled back up. So again, no advantage. Net volume and net issues all over the place, not a trend. Up, down, ended up. So yeah, so basically the neutral range day played out in form, but we did technically close slightly below range, okay, from the previous day. Breadth was quite neutral, as you can see. This is breadth from yesterday. So the NYSE, NASDAQ, and Russell advanced decline delineators, all in the gray range, neutral range. Even the high of the day, low of the day, very little advantage. Trends all in the middle in neutral range, neutral to bullish. The volume delineators slightly bullish on NASDAQ and Russell. Amazing to see Russell move up so strongly in a slightly down market. With these kinds of fairly neutral internals is very unusual, but I think it just portends a top. Yeah, I think any up moves are being distributed right now, and then we see things like overnight where it drops back. Volatility was up yesterday. It was up quite a bit. Obviously, these are end of day readings, so end of day we had a strong rally, so it pulled back, but we still finished green. Overnight, the trade in VIX futures dropped down near yesterday's pre-market lows, but now they're up quite a bit from yesterday. So volatility up. The killer for most people trading volatility products is the contango, the relationship between the front month and the near month, which is the next expiry. VIX futures is at 13% contango. So due to the negative roll yield that creates, due to the structure of the funds and the way they hold futures, VIX, VXX and UVXY, especially the leveraged guys, TVIX, have been bleeding heavily. So they will have their day, and hopefully that's soon, because we've lived in a strong contango environment for 2 months now. So they will have their day, but the problem is you're going to have to get some real fear to overcome. You're going to have to get a strong move in both, especially in the front month future, but probably you're going to see a move that moves the near month as well to get that up. All right, let's go to block trades very quickly. We had some large trades at the end of the day. 4.6 million shares, SPY 210.08. Okay, so we basically revisited an old level. If we go to the long-term block trades, let's is that out? Yeah, let's take out the little guys. We'll be able to see a little more clearly. So we revisited this level back here, which is in the 210s, right? And all we've done is, they're buying on lows, distributing on the way up, distributing at highs, selling off, buying more at lows, distributing on every high, buying up, distributing, and it looks like a pattern that will break, although the worry is that if we get above this level, this is basically a double top now. In markets and on block trades. So if they can manage to get price above here and use this as support, then they can really run, right? Because that's going to be a quite a strong technical level to break. So my feeling is they don't do that immediately, but we'll see. I mean, price is below these level of block trades now, but we're really in kind of a danger zone for that. If we manage to break out above here, then don't be foolishly bearish. Don't try and stick a flag in the sand and defend shorts that may go badly negative. So anyway, that's the read on that. What's happening in IWM is basically the same, although sort of for the bullish case, I don't want to get too bearish, even though I see some cracks in the market and things I don't like, because we've got every time we've had a lot of supporting block trades and we pop up, and any slight down move we get a big closing end of day order, and then all these supporting late prints that come in. It's been happening on IWM, it's been happening on the Qs, as you can see here. Very much a support level. 106.28, very much the support level. 108.47, very much the support level. 109.26, we'll say. 109.55, right? So we're above all those support levels. So we want to be honest with ourselves and objective. We have to say that there is a lot of support on this market so far, even though we see some cracks in it. So we're going to just have to be careful still. Okay, I think that's the message for today. I think that's all we need to cover pre-market, and so that's it. So we're looking for cracks in the market to continue or start a real down move. We see bonds and volatility agreeing with that, but we also see a lot of support on block trades, and we don't want to fight the market. We want to let the market tell us what to do. So we're really going to have to start getting below some of these levels to get really bearish. Okay? All right, that's going to end it for today, and thanks for joining. Bye-bye.